Go for it.
Hey everybody, we hope you're doing well today. We're going to go over our 2022 kind of review of the market and talk about what we expect to see here in 2023. And with already a few weeks into the year, we can already talk about some data and some anecdotal data that we're already seeing in our market. So let's rewind and look at 2022. We begin the year on the heels of a robust market, and it seemed like it had no end in sight. But then it took an unmistakable shift, bringing 2022 to a close with a rebalancing of our marketplace. The first quarter was defined by multiple offers and homes selling over list price. And then Q2 saw the first signs of softening as interest rates began their rise. And by Q4, we had seen the full effect, with buyers having more power than they've ever had in the last few years. Typically, to even think of asking for closing costs or concessions from a seller was nowhere in sight, but now it's become commonplace. And this is what we saw pre-COVID, and we just had a 2-year run where that was just unprecedented and we didn't see it at all. Despite the shift, as I'll talk about, the Triangle real estate market continues to boast incredible sales prices, and the numbers, especially in our $1 million and up bracket, are certainly noteworthy. To give you an idea of what the current marketplace looks like, there's fewer buyers than there were last year. We still have extremely low inventory, and we have steady to slightly increasing prices. Buyers have left the market for a number of reasons. Of course, higher interest rates, economic instability for some. One of the biggest factors that often doesn't get talked about enough is during COVID, we had such low interest rates that for many people, what we're experiencing right now is something called the lock-in effect. A lot of folks were able to refinance their interest rate to a low one, such as maybe even below 3%. And for those folks, it just simply does not make sense to make a real estate move. They have the house that they need, the house works for them, and the payment is as low as it could possibly get. And so for a lot of those people, they're locked in. They're locked into not wanting to make a move for those reasons. And because of this lock-in effect, that's the primary reason that we're still experiencing extremely low inventory. Another huge reason, and honestly a concern for us moving through 2023, is that during 2022, as the market started to change, a number of home builders started to slow down their production level. And because of that, we're going to continue to have low inventory in new homes and existing homes. As we sit here today, we only have 1.5 months of inventory, where a balanced market is anywhere from like 5 to 6 months worth of inventory. So we're still extremely low on inventory. So a concern that we have moving forward through 2023 is that if we continue to experience this low inventory environment and interest rates do come down, as they already have over the last 6 weeks or so, that we may end up not in the exact spot that we were in over the last 2 years, but a similar position. And that's definitely a concern that we have moving forward into 2023. And again, remember simple economics here, supply and demand. If our supply continues to decrease and demand starts to increase, of course, we expect that we will see an increase in pricing. And so there is a concern that we start to get back into that rhythm as we move through 2023 if we don't see the number of listings starting to increase. When you read news stories, oftentimes they're reporting on national markets. Real estate is local. You need the local numbers and the local opinion, and that's what we're talking about here, the Triangle real estate market. Let's talk about 2023 before we end here. So I like to call this anecdata. This is anecdotes. That's not really data yet, but it will be data soon. And so what we've seen in the first few weeks of the year here is we've seen an increase in buyer activity, meaning more showings, more purchase applications for mortgages. Last week, purchase applications were up 28% week over week. That's a huge jump. So we're starting to see buyers come out. We're having a lot of conversations with buyers who are ready to make a real estate decision in 2023. And so this activity is definitely ramped up from what we saw in the last 2 quarters of 2022. This Activity really started in about mid-December and has ramped up exponentially as we've moved into the new year. So what are our predictions for 2023 here in the Triangle market? Again, I expect that we will continue to see low inventory. I'll be surprised if we end the year with over 2 months of inventory. I think we probably stick at about 1.5 months of inventory and potentially maybe even move lower than that. I expect that we see prices to be sticky with a slight increase, meaning somewhere in the 3 to 5% appreciation range. This would be a normal appreciation for our marketplace. And I expect that we will see, and we already have seen, the return of multiple offer situations for the right property, meaning a home that's in the right location, is priced properly, is prepared for the marketplace. Those homes are already receiving multiple offers. The difference from this year and last year with these multiple offer situations is we're not seeing prices sell for over $100,000 more or $100,000 in non-refundable money. We're seeing more in line with the list price, maybe slightly above. And finally, if I had to make one bet on the year, I would make the bet that we end the year with over 153 sales of $2 million or more. I think we probably end the year closer to 180, if not 200 homes sold for $2 million or more. So be sure to go ahead and subscribe here so that when we come out with our video market update in 2024, you can keep check on me and see if I was right or wrong. Hope this information has been useful. If you or someone you know is thinking of making a real estate decision here in the Triangle, whether that's buying, selling, or building in 2023, reach out to our team. We'd love to help you and get that conversation started.